Hey guys, welcome to another trade review. And today I'm going to review this trade I took on 7th of October. So prior to this trade, I took one trade. So this is the second trade because the first trade, it took the opening range low and the trade back to a premium 5-minute CB, taken out the short-term high, and then after 10 o'clock silver bullet. So to me, what I'm looking at right now is I'm still bearish for the opening range midpoint, and then I want to see price use this 7th of October first minute fair gap to trade lower. So yeah, we can see that it rejected from the 5-minute CB with a immediate rebalance. So what I'm entering now is I'm using the 7th of October first presented fair gap, which is the current day's first presented fair gap as an entry. And I'm also using a treating it as it wants to trade away from the 5-minute CB right here, and the opening range low. Okay, yes, it's taken like that, but the wicks does the damage in it. So to me, it can trade lower because my ultimate draw is right here, 25180, which is the Monday's first presented fair gap, and then we have the pre-market low right here, and we did taken out a lot of buy side. So yep. So basically, what I'm entering on three premises. First is this immediate rebalance. Second is the first presented fair gap, and third is the 5-minute CB. So it's, there is stacking conference right here, and we did taken out the opening range high. Okay, so this is a new dealing range right now, and it traded to a premium, then traded to a 5-minute CB. That's why I want to see rejection. And after this immediate rebalance, we did have rejection. Then this was used as an emergent fair gap. So just want to see price keep on trading low right now using the first presented fair gap. And that upward movement right there is fine because it just retests the emergent fair gap that I said right here. Just a tiny little one, but yeah, everything is coded. And right now, just pulling out the intermarket, I'm seeing dollar trading lower. So I want to see immediate reaction of the charts right now because we did poke the 5-minute C below again. So that to me is, if he wants to trade lower, you have to do so and leave a swing high right here because that will be a signature of weakness. That's what we want to see when we are bearish. And right now, this is, yeah, my draw is 25180, so it's like a 60 points away draw. So it's an easy 30 points trade right here. And that was what I'm taking the silver bullet based on. And then during my first trade, I used this CB to enter, and we did tag the opening range low. It's okay. And then later it trade back to a premium. Then now, right now, we are below the 5-minute CB again, and we are also below the first presented fair gap. So this can very much act as a reclaim CB. That's why you see me extend it through, and you can see the bodies are just outside. The bodies is not even inside of the reclaim CB, and that is very nice. And you can see this candle have to close below the opening range gap. We open, and did we see it? Yes, we did see it. So, and then I saw this immediate rebalance also. So the characteristic of immediate rebalance is you want to see the next two candle after the immediate rebalance, will see it expand over. And why did I shift my stop loss here? Because like I said I wanted to see that swing high. So right now this swing high is a short-term high and it need not to be traded to again if we are in a sell program. And we did trade, we have an immediate rebalance and we traded away from this reclaim C fair value gap, and you can see the bodies, there's no bodies inside it, and that is what I want to see. So very confident that price is not going to trade back to the short-term low, because the short-term high, because this is what we want to see, bearish market structure behind us supporting our trade idea. And price did utilize this like emergent fair value gap right now right to the tick, and then later expands lower. So you can see I type that I have to use that BC to trade lower. I want to see it close outside of it, okay, like this. And right now I'm just looking at the midpoint of the emergent fair value gap, and stop loss is better than break even right now, because this immediate rebalance is also an order block, because we don't want to see price trading back to the first minute fair value gap right now, and then we don't want to see price trade back to the 5-minute CB if it is inside a sell program. And also we really use the emergent fair value gap to trade lower. So right now we are inside it, and I just want to see this BC act as an emergent fair value gap right now, and also show us expansion, because yes, that's what we want to see after immediate rebalance. And see me measuring that order block, just shifting my stop loss below the mean threshold, no, above the mean threshold. Yeah, you can see that it have not left the emergent fair gap, but the midpoint, like I said just now, we are looking at the midpoint right now. The consequential encroachment, there's no bodies trading above it. So this is, there's sensitivity right now, and I just want to see body stay below it. And right now, this is a very nimble trading, because I'm basically trading against my high time frame bias also. That's why, yeah, the first trade I was a bit overzealous, but this trade we shall see how it goes. And yes, that is what I want to see. Expansion from the emergent fair gap. Yes, very nice. Want to see a big candle close, and then intermarket is supporting it. Dollar is already trading higher for this relatively equal highs, and then indices are all trading lower. So that's a very good risk off scenario. And boom, there we go. Traded to opening range low, and yeah, that's my TP. So basically that's the trade. Okay, just looking for the, yeah, I was looking for this low, but because I only have one contract, so the way I trade one contract is where put the lowest hanging fruit first partial B, that's where I will take my profit. And you can see I dragged the TP right there and it hit it, and yeah, the opening range consequential encroachment, opening range gap, consequential encroachment is tagged, and that's where my TP is. So basically right now, just study, and it's a pretty nice trade right here actually. Yeah, like a 34 point straight, and so these days, it ends my losing streak. But right now, what I can see is my risk management and my trade management is really on spot right now. The way I manage risk is very impeccable, and the risk to reward is very good, because you can see maybe so yeah, so this trading session wasn't an easy, but it's quite navigatable. You can see that I typed there, and yeah, I just basically pay the trader, manage risk, and get it, and then just stay out. Anyways, it wasn't an easy session, but still these trades are all taken based on the logic of really have pre-market session highs taken, then this short-term high is taken, then you trade to a premium. I basically say all the logic right there. But I just want to show you guys why do I feel like my risk management is on point right now. Okay, for this trade, the initial risk is just 16 points. Okay, my maximum risk is $40. Usually, you just spike up. That haven't even reached my maximum risk, and then this is quite conservative really. Okay, you can see when I shift my stop loss here, it's just a 10-point stop loss. And my first trade also 10-point stop loss only. So, and risking, I'm risking 20 points, like less than 20 points to make close to 40 points, and that's a very good risk to reward right now. And this is something uh I have observed through my trades right now. I can see that, yeah, just by continue on doing the right things, definitely I can see consistency and profitability in no time, because it's it's just all about managing risks and just doing things when there's time and price. So when the favor is on my side, then only I'll do. Because you can see that this is 10:20, but I sat down in front of the charts, I think at like 9 something. So you guys can go and look at the full live stream. It's over there. Okay, and you can see just basically just the whole trade management is just managing risks. Wow. So yeah, I'm pretty satisfied with my progression, and it's just about doing the right things. It's just about not rushing things. And right now, it's just normal, like, oh, I get a trade, that's it. As I lose, I stop. I win, I stop also. It's nothing much like, last time I still remember when I first uh, won a $25, when I first won that $100 plus. It was like there was this dopamine effect. But right now, to me, it's just about doing the right things over time, and I'm just basically aiming for 2%, 1.5 to 2% a week, and this basically ends my week just like that. No doubt, I was in a losing streak, but the whole September, okay, maybe I'll just show you guys. The whole September losing streak is uh yeah, that you can see there is no winning streak, so it's just a red month, okay. And I only took like 5 trades for September only, okay. Yeah, so I really believe less is more. If I don't see anything, I don't even want to trade, honestly. So I need use my bullets when it's worth it. And you can see the whole September I only lost 5 trades, and it's total up. It's just I just round it up to $170, and just one trade itself. Okay, just one trade itself, I made almost half of the drawdown already. So yeah, just looking at all my stats there. Like last time, this is the one that caused me to have the bigger drawdowns, but it's okay because you see, I've stopped doing all those nonsense already. To me, it's not really nonsense. Like I stopped taking risk that is not worth it anymore. So that's why my frequency on trades is more lower. Okay, last time is quite low already, but right now it's even lower because I'm being more picky on my trades. And right now the current market condition is also one thing to take into account. So yeah, I'm very satisfied with I'm very satisfied with how I'm trading right now. And I'm not going to change anything. I'm just going to keep on doing this, keep on sticking to one contract until I'm consistent 2% a week. And if you ask me, I can very much see myself getting to there. Okay, I'm getting real close to there, honestly. Just need time to show me the results and data. But I'm just doing the right things right now. Just trading. Uh, you know, just yeah, trading within the risk parameters. Doesn't matter what I use for entry or whatever, because as long as I know when it's going to run, when it's in a sell program, when it's in a buy program, then I'll just use whatever to get do it, as long as it's within my risk parameter. So that's the way I'm trading right now. And just looking back to my first few trade reviews, I'm really glad that I did all these trade reviews, because unconsciously there is progression just by doing the right things. But if you do the wrong things, you will see progression also, just progression towards the downside, and that's not what we want to see, right? So yeah, this trade is pretty much just a short scalp. And you guys can see that actually it did offer my terminus towards my terminus, more than that also, because it happened to be I happened to be my bias and draw on liquidity happened to be on spot. But that's not the and yeah, so you can see that I was looking for this Monday's first presented fire gap as the draw, and there we go. He reached it just like that. And do I feel like I should have uh you know trade two contract, then just leave one for the terminals and what? No, I don't feel like that. In fact, to me, that's ICT. There's a podcast. He said like, when being right is no longer enough. So, well, I guess I'm pretty much at that stage right now, when being right is no longer enough, because you can be right but not profitable. So, if you ask me, I'm just feeling very satisfied that every time I point to a draw on liquidity, and when it reach there, it's just like, yes, I did not get anything monetarily, but experience is gained. And I'm kind of getting bored of reading price like that, honestly. So it's just logic, and the more you do it, the better you get. And when you just feel like price is going to reach here, and there's a logic behind it, you just take a trade. And this whole trade I want to mention is this blue line right here is the previous day high, and that is one of the filters that I implement right now, which is basically what ICT say. You need trade when you need trade after the manipulation stage. You trade along power of three. So yeah, if you don't see previous days highs or lows taken, or previous week highs or lows, you have to wait for previous session highs or lows to be taken. You have to wait for manipulation if you want to be more on site. So you can see that opening range high was taken, then it trades to opening range low, then it trades back to a premium, then it continues lower towards my terminus. So that's why I'd say that this was not a very easy session, but still the trades are there, the logics are there, and I traded very nimbly because I'm trading against my bias also. So it's just about like that. Taking to me, the way I look at trading right now is, I make the decision, and you know just be responsible for your actions. Like the first trade right here, okay, in a low resistance run, okay, it should have just continued lower towards the midpoint of the opening range gap, then towards my draw. But it did not do so, and I decided to hold on to the trade, because this is another thing that I want to mention is, yeah, whenever trading against your high time frame bias, you got to be nimble. You got to be more nimble than just being nimble. So when you think like you want this opening range, like I was just looking for this midpoint. Actually, I could have just taken and the opening range low, and that's a very easy $30 run also. So yeah, it's basically, every trade is a very good lesson. It just reminds me of, okay, what is important, and am I constantly doing the right things? And if I do not do the right thing, it costs me to get stop out in the balance. So my first trade, I did want to hold on to the trade, but what I did was I just shifted it to break even, just to see whether have continuation lower. And yeah, because this opening range low is definitely a place where I would pay the trader. But because I only got one contract, I have to do things a little bit differently. But right now, yeah, it's just you make the decisions, you eat the consequence. There's no right or wrong or what. Okay, you just keep on doing the right things, and I believe the results will come. So that's why I'm so confident to say that, in the next 3 years, it's going to be, it's just natural. Okay, if I am still alive, I will definitely have financial freedom. I'll definitely be, I'll definitely have a lot of money, but it's just all the beginning. Because you just multiply doing the right things by, let's say, 300, 400, 500, 600, 700 days. It's just logic. That's why, just looking back at my last time trades and looking at how I trade right now, all I can say is just keep on doing the right thing repetitively, and then one day you will just be where you deserve to be, because it is just meant to be. So yeah, I'll see you guys in the next